Today's topic will be on the UOBAM, FTSE ASEAN Dividend Index ETF, right? So later on, Shankar will be sharing much more about how exciting this ETF is and also how it can play a part in your investment. Right? So do actually tune in and we will share more about how to apply after this session. I will be sharing how to apply on the Police platform and also the details of it as well. Right, so without further ado, let's put hands together to actually welcome. Hi everybody. Firstly, I want to say thank you for coming. We're rainy day outside. And really happy to have you here on our first day of the IPO. Okay. We have a very interesting product. But it is a market that actually is very, very familiar to all of us, which is the ASEAN market. Today, you guys are having chicken rice, right? And chicken rice is a common dish that you see in Singapore, Malaysia, Thailand, Indonesia, and sometimes in some places of Philippines as well. And those are the markets that we are investing in. Okay? We think it's a product because over the last 12 to 24 months, whenever you talk about investing, you look at a couple of things, especially with the equity markets, right? We look at global equities, we look at the Max 7, we look at financials. Over the last 6 months, maybe a little bit more into China. And these are very exciting themes. These are themes that make good returns, but actually there are opportunities that's a little bit more closer to home. Okay? Now the ASEAN markets, one thing about ASEAN markets is being something a bit more volatile, a little bit more riskier. But the reality is that actually the ASEAN markets are very, very stable. And a lot of regional champions. And these regional champions give you something very, very interesting, which is basically dividends. Okay. So what we've done here, and the name kind of suggests, is that this is a dividend index ETF, which means you will follow a FTSE high dividend ETF, and that gives you a few things. That gives you good income. We think that the ASEAN markets, especially ex-Singapore, Malaysia, Thailand, Indonesia, Philippines, valuations are really, really attractive. So which means there is potential for capital gains upside. Second, thirdly, there's also concerns about market volatility. Given that all these are local champions driven by local business, it does give you quite a good diversification compared to your other assets. Okay, so this is the first slide. This is the main slide, and everything that I'm going to talk about can be encompassed in this slide. Okay, now the investment objective is to actually track the FTSE ASEAN X-REIT Target Dividend Index. Okay, that index was created on 3rd of October this last year, and it's already been up close to 8%. Okay, what we're going to do is to replicate the index. Right now, it's designed to do two things. The FTSE ASEAN Index, which is the benchmark index for ASEAN, we will try to focus to get 100% dividend increase. So whatever yield that you see for the FTSE ASEAN, this is designed to double it. Okay, so on a net basis after tax, the FTSE ASEAN Index gives you a yield of 4.11. So all the underlying securities, when you aggregate them together, you get a yield of 4.11. The target index that we're looking at actually gives you a yield of 7.43. So a significant pickup. All right. Now, this means that this product, by nature of this, is designed for one thing: clients who are seeking for income. Right. Now, for the next 2 years, we will make half daily distributions, dividends, and it will be at least 6% per annum. Okay, and that will be done in March, September. So, which means that you will have your distribution or your dividends in March 2026, September 2026, March 2027, September 2027. Okay, it will be at least 6% because currently the yield is already 7.43. Okay, now in addition to that, because this is an equity index or equity ETF, we also want clients to participate in potential upside. Okay, so we invest in 5 countries: Singapore, Malaysia, Indonesia, Philippines. These are two things. They are either developed markets like Singapore or emerging markets, which is Malaysia, Thailand, Indonesia. They will give you participation for large and mid cap stocks. Right? So good dividend for your investments and potential capital gains because we believe today, especially in Singapore, the markets are relatively cheap. Right? Okay. If all you further, there are three things that we want to talk about. Okay. Three-dimensional. Okay. First and foremost, the dividend income. Okay. Now, ASEAN market, if you've not invested in it, the Singapore markets are kind of similar. It's very, very favorite. We are Singapore stocks. If you go to Malaysia, you go to Indonesia, there are a lot of stocks that pay good regular income. Alright? So, when we look at income, there are a couple of things that we look at. Firstly, actually, if you look at it currently, if you go look at your bank deposits, your bonds, actually the yields are relatively low. Okay? So last year in 2025, dividend ETFs, which is all in terms of investors. More and more investors are starting to look for more and more income opportunities. And this is an interesting one. Okay. Now, when we look at it, we want to make sure that there are three things that you can participate on. First and foremost, steady income. The companies and the stocks that you invest in have a long history of paying dividend distributions. Two, market participation. Because you're investing in equities, you want potential capital gains. And three, defensive stability. Actually, if you follow the ASEAN markets, it has been relatively stable over the last 6 years. In fact, the ASEAN markets in the last 6 years only had one negative calendar year, and in that period, it was only down 50%. So in this environment where people are worried about volatility, this is a really, really interesting option. All right. Now, firstly, the dividends. If you look at these few lines here, what you must realize is that today there are not many places that you can get dividends anymore. So if you buy global equities or S&P 500, the dividend yield is 1.6%. At most you can get 3%. But the ASEAN itself, gives you a yield of 4%. For ours, even higher. Focus on doubling the dividend yield for the FTSE ASEAN. Revenue on a drawn basis, let's say 8.6. Very, very attractive dividend yield. Right? Now, the yields are not enough. We have this thing called the default market. Okay. Now, if you notice that again, the fund is called UOBAM. Also, I'm going to bring this again. Okay, we're going to bring it. The share does demo comes from dividends. And they were very, very excited. Because the demo comes with dividends for the ASEAN market today looks like what China was years ago. Highly educated, all willing to work, all okay. Now, ASEAN market shouldn't be something that we don't look at. Because why? Actually, by 2030, the fourth largest trading block of people. Again, very, very few investors, even a lot of sophisticated investors like in the room have an exposure. Okay. On top, a rising middle class. Half of ASEAN's population is under 30 years old. Under 30 years old, and by 70% of this is half of the middle class. This food spending ability to consume well-educated, basically all of these things after it becomes a shape, if the other market what wants to look at. Good demographics, what is education, what is education, and that makes the other market very, very okay. Now, 12 months ago, a lot of us talked about this, we talked about the liberation day. Okay. Now, a lot of these concerns have really left. And with this, we actually expect an ASEAN GDP growth actually You already see in Singapore, fourth quarter, 2025, please be sure. Likewise, you see in Malaysia, likewise, you see in Indonesia. So this region, what is the duration? And so obviously is the market is what I'm interested in. No, back 7, where it's true. If you look at the movement point of view, 3 years, over the last 6 months, you can see US 40%. Singapore, Malaysia, Indonesia, Thailand have all outperformed the US market. Many people over that. Right? And actually, end of the year, even better return. That's the year that there are huge opportunities. In addition to that, valuation point of view. The ASEAN market, very valued. When you dig down a little bit deeper, there's a lot. The Singapore market is represented by the firm's historical. But within the ASEAN market, that's the only market. Malaysia is below long-term average. Malaysia is below long-term average. Thailand is below long-term average. The Philippines almost. Okay, you talk about ASEAN market, you always talk about the thing of FDI, foreign investors. It's a small time low. You now have good dividend, good diversification, good valuations, and you start to see income coming into the market. The other thing that you want to highlight is that ASEAN markets very, very well currently when the US dollar is. So you saw last year with the big US dollar, a lot more money coming to the market. So it's still very, very good. Very, very good. Within the ASEAN market, we are very ready. Right? Now, a lot of investors here, you already have your China stocks, you have your FTSE. Why are not ASEAN market? Okay. One key thing is the diversification benefit. And the ASEAN exposure to defensive sector is close to 77%. And for us, the financials in this region are considered defensive sectors. So if I add up financials, telcos, utilities, consumer staples, and healthcare, it adds up to 77%. Compared to global equities, if we add everything up, it's 43%. Why? A lot of the names are not tech names. It's good growth markets. But the key point here is that if you are going to add exposure, it's a great way to So, show you a little bit more whether this shows you the correlation. For example, so I'm trying to say ASEAN and Singapore correlation of this index policy. And if I compare it against China, 30%. If I look at REITs, 45%. And if I look at Russell 1000, US market, the correlation is 0.01. Completely different. Okay. So we have a very interesting good dividend, good diversification.
This speech is available.
Okay. Now we will follow a work together to see whether this is actually and this is designed in double within you, the straight or top. How do they do that? First, start with the universe. You will follow the same universe which see ASEAN in that. But then right? I want dividend. So consider I remove it.
不可以放那个 chat 这那个口信叫你换成 to privately 的，有那个 speaker。
Don't have one income. Okay. Next one. Then you can do it when you have the review of what we call dividend package. You remove stocks that don't pay dividend or stocks that have dropped significantly because of that.
Okay.
Right?
So
from here, I remove the name. Then you rebalance it based on market valuations. Okay. And then you still get a very, very strong name. I will show you later as part of the team. Okay, and then index is going to be rebalanced in March. One very important again, my true norm is always okay. Every September and March, if the stock price has done very, very well, the dividend will be lower. Right? Right? What? Dividend will go down. What we'll do when we rebalance is that I will take and I'll rebalance the stocks that have gone down a little more. I'll do that usually over 6 months. And what you get this. Okay. First and foremost, I will have income return. Every 6 months, I will allocate a higher weightage, higher dividend to stock, so that I get a higher income. Second, during the rebalancing, because the stocks have already made money, I will take out. So which means that we will always be focused. What is different like for example, it's an S&P the market capitalization. In largest will always be the large. Whereas here, I will always follow. So that makes this unique. Rotation for this is before, back, and the focus is always the focus. How does it look like today? Right? Now, mentioned earlier, there's a bit more focus on financials, there's a bit more focus on telco, there's a bit more focus on the energy stocks. But let's focus on the if you buy a normal FTSE ASEAN, because Singapore is a very big, small market, it kind of represents 40% of the whole ASEAN market. But because I'm focused on dividend, the Singapore allocation from 40% dropped to 10%. What it means is 70% of this portfolio is invested in Malaysia, Thailand. Okay. Now, what this makes it very interesting is this. During IPO, we will offer this big order. Okay. And you want to buy a Malaysian stock, right? Convert. Okay. If you want to buy Thai stocks, you have to convert to Thai baht. If you want to buy Philippine stocks, you have to convert to peso. If you want to buy Malaysian rupiah, you have to do that. With this, everything is done. You invest in big dollar, automatically get exposure. Indonesia, Malaysia, Philippines, from an allocation point of view, second highest, Indonesia. Thanks, you put it 9%, 8%. Okay, and for you to convert your money to Indonesia, that means one more everything. This issue, automatic exposure, is diversified, comes 5. Okay. What about the gains? I'm investing in the small cap, big cap, but let me just take a step back and look at this detail. You travel within the ASEAN markets, any of these things? PBS Group, Bank Mandiri, Bank Rakyat, OCBC, UOB, Bank, Astra, Young Commercial, they are all champions. They are all the all local champions. So even though this is a very simple confidence, actually investing is that when you land the airport Jakarta, you will see advertisement for Bank Mandiri. You land in Malaysia, you've got to go to a Bank branch, right? Go to Thailand, you definitely see them. So this is something that has a lot of value. Okay. Almost close to my presentation. Very good. Okay. So for this ETF, they is the term give you one details in terms of how long it lasts. This security is really, really interesting and again, okay. But there are some things that you can keep. Okay. So the almost you get access to a portfolio of asset dividend-paying stocks in a single fund ETF. Okay. Investments are the stock ETF will provide the conversion for you. You don't have to worry about it. One place. We have this in two currencies. During IPO, only the $6. And post IPO, we have $. And I like to call them up and up. Okay. So $6 is UP. US dollar. Okay, so these are the right. I will invest in both cash and SRS and simple management of 1 million. So I want to I hope it's straightforward, very clear information. What we like to do is that ultimately you have a new ETF and you track to ASEAN X target movement. Okay? In this index, it aims to achieve 100% dividend yield compared to the other minorities. Okay? So that's illustrated here. So if the FTSE ASEAN Index gives you 4.11, you'll be approximately 100%. Okay? That's done based on a few things. Remove dividend, non-dividend paying. You remove companies that don't pay regular dividends or companies that drop significantly. Okay, so which means that we are able to provide this for investors looking for one thing, first and foremost, and we'll lock in the dividend for the next 4 months. So March this year, November, March next year, November next year, and that will be 6%. Now, I want to highlight because this is an equity ETF, prices can go up and down. Okay. Now, we invest in the 5 ASEAN markets: Singapore, Malaysia, Thailand, Indonesia.
Here, our people speaking.
Good base, the highest allocation. But that means, again, the worrying markets are a little bit expensive. There is some potential upside. This future participation. In addition, participation in emerging markets, the valuation. Okay. Will give you exposure to large and big names, but if you look at our holdings, are all ASEAN. Okay. So I want to thank you today. I have something that's very personal. I travel a lot. I do so I'm believing on the quantitative because of the world, would be 20 years ago, 10 years ago, every 10 years ago, you all want to come to the ASEAN market. I'm going to pass it on to you. Just going to talk to you about the IPO process. And once we finish that, I will still be here. We will have a Q&A session. Okay? Ken? Q? Yes, thanks, Shankar, for the sharing of the slides just now, briefing on the ETF. Right, so before I go on to how you apply for the ETF, right, just want to share, you can join our, if you're on Zoom, just take a screenshot. If you are here physically, you can take a photo of this to join our Telegram group via QR code. And updates as well as also this type of new launches, you'll be first to know of it as well. All right. Okay, so if you're also account holder currently, if you refer your friends to open an account through this QR code to create your own unique referral link, you can get up to $100 worth of rewards. So $60 per account referred, $60 per account referred. All right. And we have lowered the share financing rates. Right now, Singapore share financing rate is at 3.2%. 5.8 for US and 5.58 for Hong Kong dollar. So, like mentioned, all right. So this particular ETF is already at 6% currently for what they are trying to achieve at least for next 2 years. All right. So that's already more than 3.2% that you are paying. In a sense, if you find it a viable investment strategy, all right, but you don't have spare funds right now, you can use your current existing portfolio to use financing on the portfolio to buy the ETF as well if your account is marginable. All right. Okay. So for this particular ETF, which I think Shankar has shared already, okay. So key thing to highlight again, reiterate, is already launched as of 7 January, which is today, until 23rd of Jan. Right. So you have a 2 weeks plus period.
listing date is on 29 of 2026, right? 29 of Jan, right? Price $1 per unit, right? The minimum quantity is 100, right? There's no commission. However, there is a $10 plus GST fee if your account is linked to CDP. So you are buying through a cash management account, you need to pay this $10.90 because it's transferring from Phillip to CDP to park there. All right. If you are cash trading account, the gyro account based on with no ledger, you cannot apply for this ETF. During this period of time, from now to 23rd, you can choose to convert your account if you wish, or you open a new account to apply for the ETF. Okay, and it's full allotment. So not like the normal IPO, don't go and apply over because you scared later you get allocated less. It's full allocation. So just apply whatever you wish to get. You will definitely get 100%. 100% get 100%. Okay. So what's the reward? Just like I shared at the start. What is this? You can get up to $500 worth of cash credit. For every 5K invested, you get $10. Okay? 5K, $10, 500 cap. That is 250,000. 250,000 cap. You get 500. And for those that are here physically with us today, all right, if you choose to look for one of our colleagues at the back near the reception table later, the first 20 to apply with them for minimum of 10K will get $20 worth of fair price voucher on the spot. This is on top of this. So you will get $20 from NTUC voucher and 10K is worth $20 here as well. So you get $20 from cash credit as well from the main promotion mechanics, but that's after the end of the IOP period. Okay, so this is currently the promotion that we have. How do you subscribe? Log into the website, right? No app, website under account management, under online form IPO. I will show you the screenshot. Give me a moment. Okay, so you log into the account under account management, under stocks, under online form. Okay, follow the steps. In the middle, under account application, there is an IPO called an online irrevocable form. You click on it, they will ask you if you wish to update some particulars if you have not updated before, but you can skip it first. If you skip, just confirm to skip this segment first to apply for it before you update your particulars. Right? So you enter this screen. In this screen, you can choose the ETF in the blue color. Choose the name. Choose the name. If you want to see more details before you apply once again, you can click on the link here on the right-hand side. There is a landing page with the prospectus and the slides that he has shared today as well. If you have choose the name already, just click on apply. You enter this page. You will see your account type, right? So it's cash management. So it means that I'm also subjected to the $10 fee. So you see there's a how many units to apply? Minimum 100 in multiple of 100. All right. Then you can apply the amount, let's say is 10,000, right? $10 for the handling fee plus GST, and then my total amount will be shown there. Cash trading account cannot apply, like mentioned just now. You have to tick on two declarations. First one is over here. I agree and satisfy the below. Second one is over here. Yep. Two. After you tick on these two checkbox declaration, enter your password and press submit. Okay. You will see a confirmation page like this. And it will also show you the amount payable for the correct ETF. Okay. Do note on the part, you have to have the funds available and ready in the account, in the trading account to deduct, not in your bank. In your trading account to deduct on the 23rd of January, Friday, 5 p.m. So best if you are not sure how, fund by, so you can double check your account has the funds on hand. If you're not sure how, you can look for your trading rep also on do you fund in time, right? So do the timing and the funding. And even though just now I think Shankar has shared is going to be trading in two currencies, he is so for the application. Okay, so after apply, go back to the same page, you will see under application status, right? Under application status over here, you will see this over here, and you can see a summary of how much you have applied. If let's say along the way, you heard more news and you find that you're really more confident, right? You want to apply more, right? At the very start, get go for zero commission, you can actually modify, amend your order, okay, to adjust the value that you are going to apply for. Okay. So after you press on that, either amend or withdraw, you will need a key password to confirm as well. So you can still make adjustments to your application before 23rd January 5 p.m. You'll log in at 5 p.m. System will not show you the availability to adjust or make changes to your application. Do note on that. All right. Okay, so that is mainly the thing. Right, so we'll move to the Q&A first before later on I will share it for those that want to see the live demonstration to log in the page to see how to actually apply on the main website itself. Okay, so now any questions from the floor? It's the ETF after listing. So after 29 January, you can trade on the exchange with SRS to buy this ETF. Yes. But for application for IOP purpose and for the promotion, you cannot use SRS. Right? Okay. Okay, so we are not hedging at all. So let's say, for example, if it's the dividend is at 9% rupiah, that will be passed back. The risk would that be on your total, on your value of your opportunity. Okay. We think about FX in two ways, right? Now, first and foremost, it's anchored in $6 because today Singapore is the largest allocation for that. So 70% of it, it's diversified. It's not all 70% rupiah, not all 70% ringgit, not all 70% in Thai baht, not all 70% in peso. Okay. Now, a weak currency doesn't necessarily mean it's a bad thing. Weak currency can actually mean that the stock market will become more attractive. Companies are able to export, import better. So for us, in this case, we are not hedging at all. Right? What the benefits for investor is that you're not investing in one single currency, you're investing in 5. It's quite diversified. And if it drops, it's rare that everything drops together. And most importantly, it's anchored to $6. So we think that the opportunity also is reflected in the currency, and that's why it's not hitting the roof. Okay, so 6. The dividend is 6. Yes, correct. Yep. Okay, we want to make sure that it's at least 6%. If it's like 6.1, 6.2, yeah. So it really depends on where the returns are. Every time when we make the distribution, we will check how much we make. If we are able to give more, we will try to give more. But you also have to do two things. When we think of this, we think about two things. One is sustainability of this product. The NAV continues to go up. So if I make 6.1, 6.2, don't expect a lot more. But if you do a very good one, we'll definitely try to make sure that it's benefiting the clients. So that's the yield of that's the current yield of the ETF at this point. Yeah, that's the current. So we're not, just to clarify, 7+%, that's the existing yield or as at end of November. But for the ETF, we will take and we'll pay 6%, at least 6% for the next 2 years. Correct, that's right. So there is a risk on NAV. Let me be very clear. It doesn't mean that it's guaranteed both the price and this. We will still pay the distribution, but if the situation, if the stock price goes down, then obviously there's an impact on NAV. So that's correct. After 2 years, basically what we do is that it's the prevailing dividend. We will take an average of it, right? Historically, when we look at the underlying, the yields are typically between 5 to 7%. Right. So I hope that answers some of the questions for here. One more question for the floor before I move to the online chat as well. Yep. Sure. Yep. Yeah, there will be more share issue. So in addition to buying this, Philip is also our intermediaries. So if there's more if there are more money coming in, it will actually create more units. Size can continue to grow. Yep. Depending on the size, can actually go to the market and sell. There's definitely liquidity. So the markets, whenever you want to sell, there's going to be opportunity to sell the market. Yeah. If you buy an IPO, you can sell after the listing can. If it's in between, then you just withdraw lah. Yeah. Yes, that's right. There's no nothing stops you from selling it the day after. So if after a month it's done very, very well, it's okay, look, my target is to get 8% returns and it hit 8% targets, by all means. Okay, so let me move to the online question first before we continue with the physical one. Give me sorry. Yeah. Yeah. Okay. Very, very good question. So in this case, they are purely a marketing unit. The ETF here will also be dual listed in China. All the money will come back here, which all the responsibilities belong to UOB Asset Management. Yes. So they are just purely a distributor for us. You switch on. Yeah, correct. So the question after that, I'm doing online first. There's one question on the big percentage of financials. Yeah. So do you find whether is financial sector considered cyclical for ASEAN or is it defensive? And next part is the Indonesian portfolio is around 20% or more. All right. So the emerging market political shift, and regulatory changes and currency fluctuation for Indonesia might be higher. So is it going to have a risk of negatively impacting the returns via Sing dollar base? Two points. Okay. Let me address the first question first, right? The first question was financials. Okay. The true north of this is always the dividend yield. So because of that, actually the sector allocations can change over time. So when we look at it on a longer basis, financials stood at about 30% the lowest, and where it is today is the highest. So it can move and change depending on where the yield opportunity is. Okay, the biggest yield opportunity within the ASEAN market is financial, and that's where we are. Okay, Indonesia is definitely an emerging market. If there is a movement in the Indonesian rupiah, your NAV will be affected. Okay, there's no hiding away from that. However, it gives you something that you don't have in today's Singapore market. Firstly, as a population of 300, you get very, very attractive dividend yield because the local currency today, if you put an Indonesian rupiah deposit, you get between 3 to 4%, significantly higher. So again, this is something that doesn't mean there's no risk. There's definitely risk, but it also means that there's potential for. Okay. Now, historically, again, when we focus on the dividend yields, if the dividend yields in Indonesia goes down, you will then rotate to another country. Okay. Where it is there today, we think the opportunities are there. We look at the dividend yields are attractive, but there's no such thing as a free lunch. There is risk awarded to that opportunity. Right? Right. So let me also now address some of the questions that I think was asked on the mechanics of the promotion as well as the ETF. I repeat again, SRS funds can invest in the ETF after listing date, right? So for IOP itself, you cannot use SRS. Once it's listed, you can buy via SRS based on your SRS funds you have available. All right. Next one is for the promotion itself, for the $10 bonus for every 5K applied, right? You must hold the ETF for at least 1 month, right? After the listing, right? Must hold for at least 1 month, right? And the crediting date will be within 1 month after the 1 month period ends. So 2 months from the listing date, right? You'll get the credit within 2 months of the listing date. And the deck itself, the slides, 2 ways. One, we visit this whole session via YouTube Live. Second, on the landing page of this ETF launch, on our homepage, the first banner. All right. There is a page book which have the slides and some details as well in that page. And page you can look through that if you wish to revisit the slides alone without the presentation. Right, so going back to the question, all right. Vietnam, why is it not included in ETF? As well as, is there any risk on or concern on reduction of NAV to achieve the dividend percentage distribution?
Okay, so let me address the Vietnam market first. So aside from we actually have an investment office in Singapore, Malaysia, Thailand, Indonesia, as well as Vietnam. Okay. Now, for this purpose, we wanted to focus on a few things. We wanted to focus on income, and secondly, we wanted to focus on some form of stability. So what we invest in markets that are either developed or emerging. Now, Vietnam has become an emerging market for FTSE, but not for MSCI, right? There's a few reasons because of that. One of the main reasons is this thing called foreign ownership. So for a lot of good stocks, there is a cap in terms of number of foreigners that own kind of stocks. And a lot of their stocks are. So given that situation, if we are able to put Vietnam here, and if I want to put the stocks, I might not be able to access it. And second, it's still a frontier market. That's why we actually remove Vietnam from here. Two, the question asked is then, if let's say, for example, if the market is flat and you pay a distribution of at least 6%, does that mean my NAV will go down? Answer is yes. Okay. So that's why for us, very, very critical, there's two parts here. One is the income component, and second is the market participation, because that's where we want to be able to see capital gains. So there is definitely the risk, but where we see today the valuations of the ASEAN markets, the opportunity to participate in that, we feel that kind of balance things out. Okay.
One question at the back. Yeah.
Yes. Our expense ratio, okay, we expect it to be around 1.3 to 1.4. It will, okay, if the fund size continues to grow, it will decrease. As it becomes bigger and bigger, it decreases, because I expect you two things. First and foremost, there is a fixed cost and there's a variable cost. Okay, the variable cost in this case is the management fee. So that means it always goes up and down. The fixed cost is a fixed amount. So given if the size continues to go up, as a percentage, that cost becomes smaller and smaller. So as the fund continues to grow, which is why Ping An is important, because we want to sell this to clients in China so that we get more money, so that in this case, your expense ratio will actually start reducing.
Right, so that is also related to another question. Is it a passively or actively managed fund for the ETF, as well as is the 6 to 7% guaranteed for the first 2 years? Okay, we face a bit.
Let me address things. Is it a passive or active ETF? So this is a passive ETF, which means that we will always follow the FTSE ASEAN X REITs index. So whatever is in the index, we will continue to buy. Okay, so it's not active. We're not here to outperform the index, because two things. First and foremost, there's very, very good dividend. If you look at, you can go to the FTSE website and you can actually download the performance data. Actually, the performance data is actually quite good. So we want to replicate that for all of our investors. Having said that, because of the process that it runs through, there is a part of it that the rebalancing helps to make it a little bit more active. So there is a slightly higher turnover for this compared to a normal passive index. Okay, but we will passively follow the ETF, the index. Okay. Our second question is that the yield. Okay, we will pay a minimum of 6% for the next 2 years, and after that we will use based on the historical average of the yield. So not 7%, it's 6 at least. Even though the yield today is a little bit higher than that. All right.
Right. So based on the price today,
Yep. It will really depend on the markets. Really, really depends on the markets. You have to still pay a commission, but there will still be a spread.
There will be market makers in the market, so it should be a tight spread.
It shouldn't be that.
No, you won't reach 1%. The spread between the P and us will not be 1%.
It should not be that high.
Yeah.
Yes. Okay, so two things, right? Yeah. Right. Yes. Right. Really be from the capital. Yeah. We will basically have to sell some of the stocks that we have fund the dividend. The the idea here is that we want to make sure there's continuity so that investors who go inside here will get that regular income. So there will be periods that we will need to sell stocks, there are periods that will have income, but the idea here is that what we want to do is we want to have this process for investors, because ultimately, in the end of the day, investors are buying portfolio. They want to make the regular income. So in that period of time, there could be situations that I want to be completely transparent. Yes and no. So if I sell the stocks and the stocks don't go up, then it'll be bad. But if the stocks go up, then I take profit. Then in that sense, it could be a little bit higher than that. So it really depends on where the market are, where the stocks are at the point of time of getting.
Right. I think there was a question near the back just now. Yes.
Yes. Okay. Sure. Yep. That's fair. Yeah. Okay. So to answer this question is that, am I going to focus on dividends, or am I going to focus to continue to follow the index? So the index is a dividend targeting index. Okay. So I will follow the index. Now, what's very interesting about this is that there's this part of it when we look at when we develop this index together with FTSE, there's this part where they look at dividend traps. Okay. So when it comes to dividends, what they will do is this. First and foremost, you will not invest in any stocks that don't pay dividends, right? So in that sense, it's pretty hard. Second, in terms of the dividend yields, if the stock doesn't pay regular dividends, it's also excluded from the process, and that's done on the index level. Third, if the stock price drops a lot, those are also excluded. So because those are things that it's not sustainable beyond that, right? On top of that, basically what we do is that there is a market cap weighted for all the dividends. So the bias always towards the largest stock. Yes. If you need a little bit more information on this, you can actually go to the FTSE website. They have a specific explanation in terms of how they develop this index to do dividend targeting. Yes. Sure. Then we will go to lower. We will definitely lower the dividends. So historically, the range is between 5 to 7. Because ultimately, in the end, it is designed to be double of the ASEAN markets. So which means that it will never always be at 7. It never be always at 8. It is something that goes up and goes down. The good thing is that if the dividend goes down, generally the stock prices go up. So in this case, you will see some potential capital appreciation. Yeah.
All right. So let's go to a more technical question from online. The yield of the major components such as DBS, UOB, OCBC, Maybank are around 5%. So how is the ETF able to look at paying 6%? And another question related to that will then be, give me a minute. Another related question is 4 out of the top 10 components are Singapore securities. So near 23% of total weightage. So would that lead to too much SG centric nature of the ETF?
Okay, so two parts. Definitely the Singapore names are definitely not including as much 6 months or 12 months ago. So a lot of it, if you notice here in this case, has an Indonesian bias because the Indonesian banks are paying close to 9%. In addition to that, you have other names inside there. So 70% of this exposure will be outside of Singapore. Why the Singapore name come out very, very highly is because of the market capitalization. So when they're large names, you will have a bias towards those names at the start of it. But if you go lower down, that's where you will see your Malaysian names, your Indonesian names, your Thai names as well. So no over bias towards the Singapore markets. 70% of it will be in the other emerging markets. And that's where the opportunities of the yield pickup comes in. Because otherwise, if you look at the SDI index, if you look at the S-REITs index, it's definitely not as high as where it is today. Yeah? Any more questions? What?
Any further from floor? For you to get the physical session promotion, the $20 NTUC voucher, you must give us at least 10K. Right? But if you go back home and you suddenly decide, hey, I wish to increase, right? You must let us know. Because your application is not through online. Application, if you do it through my colleague at the back later, when we end this session, through our colleague at the back, they have a paper form to fill your application. Then your application is via them, right? Not through the online mode. So later I'll be sharing how the online mode is to apply. But your application, if you apply from us here, will not be there. Inform your TR or inform the ETF at phillip.com.sg email of your intention to change the amount. Increase, yes, because it's until 23rd. The overall cash rebate of the ETF, yes, will based on the final amount. But for the one for physical today, once you log in intention to buy a 10K minimum, we'll give you the $20 voucher. Right? Okay, so any other question before I show you hands-on how you apply for it via the website? Any questions?
We'll still be here. Okay, basically, I'm still going to be here.
Yeah.
Yes. Yeah. There's two ways. We participate with the Shenzhen Stock Exchange as a connect. Ping An has the QD quota, and using the QD quota, we register the process with Shenzhen. Yeah, okay, so I hope that answers your question. So we are all still here. You can do two things. I'm still here. You can ask me questions. That's one. Two, if after the end of this and you have additional questions, please reach out to a Phillip rep. They'll reach out to us and basically we can answer.
Okay, so quick one. Just show again live. Account management tab over here. You can look at the online form over here. You click online form, you will see IPO. And you can click on the ETF, click on the ETF, double click or press apply to apply for it. All right? And submit here. Right? So for those that want to apply live now, can go to my colleague at the registration counter. For those with more questions before you decide, can come forward to look for me or Shankar is here. All right? Any questions? Right? Joining us for this, and also those that join us via Zoom. I understand that you might not have time for joining us throughout the session itself. As I repeat, with the session, just view the link for the YouTube live session, or the slides is on the landing page also. Okay. Thank you. Help us to clear your area to leave. Right. Try to clear any your or the